As the coronavirus pandemic continues to spread across the U.S., we're introducing a new segment called Fast Track, where we track and trade the data to show what life might look like on the other side. BK flagged some data out of China today, so why don't you walk us through this? This is really interesting, BK.
Yeah, so, we're all trying to get an edge on what does life look like? And for our purposes, what does the economy look like on the other side? How are people going to react? So TomTom, the GPS company, does traffic indices. They do them for every city out there. And so this is for Wuhan, which was the center of the outbreak. And you look at what it was like in 2019, that's in orange, and in blue is what it's like today. And what you see is weekday traffic down about 21%. But on the weekend, it's absolutely flatline. So if we kind of project that and say, well, maybe that's how people are going to behave here in the U.S., they're going to go to work Monday through Friday, but on the weekend, they're still going to hunker in place, stay in place, and maybe that's what the world looks like going forward.
Tim, how would you trade this data? Because you can go a couple ways. You can do the extrapolation to the United States, which is what BK is doing, or you can do the extrapolation to the Chinese consumer. And you may think that maybe the Chinese consumer, while they are coming back, there isn't that sort of return to quote unquote normal yet in China.
Yeah, and I think the Chinese consumer arguably has potentially a little bit more of a tailwind from stimulus, came into this a little bit weaker. But at the same time, we also have Chinese macro data. We're a couple weeks away again from getting another, we're going to get April PMIs, but we're going to get April import-exports. And those numbers that we got a couple weeks ago were very encouraging, especially on imports, showing that the consumer, they were effectively flat on March. And so that is very encouraging for the economy that obviously was the first to go down. I think these are interesting, but we're questioning throughout the world whether there's going to be some boomerang effect or some unfortunate return of sickness and the news flow over the last couple of days. So it doesn't really tell you how we're going to respond to wave 2 if, in fact, that unfortunate error happens.
Or maybe at least it tells us that there's going to be a cautious response, Adami, and that when things do open up, let's say, Las Vegas, for instance, Wynn's CEO is urging, the country, the state, the governor, the mayor, whoever who will listen to him to reopen the strip there. But if they reopen, will people come? And I think that's the question here. You reopen the economy, who's going to go?
Yeah, that's the thing. I mean, they can open anything they want, but if nobody wants to go, it's not going to really help. Quickly, I'll say this. It's not coincidentally that the market today, the S&P closed at a spot-on 50% retracement of the recent low, the all-time high, as did at 276 did Apple, which is probably a lot of what this report was focused on. So if you're in the bull camp, we're making a base. If you're in the bear camp that we've run too much, you take profits here. I tend to be in the take profits here camp, Mel.
All right, here's the next chart we're fast tracking. Morgan Stanley putting in a note today highlighting the air quality of 4 major manufacturing cities in China. Now, according to the report, cities like Zhengzhou, which is home to key Apple manufacturer Foxconn, are seeing seasonally high levels of nitrogen dioxide, which suggests that production may be picking up and Apple's embattled supply chain could be on the road to recovery. Steve Grasso, do you take heart from this air quality chart?
Yeah, I'm always a skeptic of all this information, but I guess too much information is better than no information at all. And Apple was one of those that we thought would be the first ones to get back to work. So I do take heart in it. And to Guy's point, that 275 level in Apple is also the 50-day moving average. So if I'm long Apple from much lower, as many of the viewers are. I'm staying long Apple. If you want to use this to add money, then use the 275 level. But think about something else. Services business is going to have a huge tailwind with shelter in place. Right now, it's at $46 billion. If you want to buy Apple, if you want to buy best in brand, you've talked to me about that in a number of other sectors. Apple is best in breed. Apple has the brand. Apple also has 5G the wind at its back. It also has the cloud. It has the $46 billion. It's not going anywhere. It's got a cash hoard. So if you are looking out on the horizon on companies that you want to invest in that are going to be around, Apple is at the top of that list.